So before starting the current market scenario, I want to tell some interesting stock idea. One stock which we feel it's worth buying at current level is the Avanti Feeds. Many times we have recommended, even 1 month back also in our Diwali peak we have given this stock. So the business for the last almost the stock price is available at a 2017 level. So the price which is now trading was traded in 2017, almost 7-8 years back. The stock was at that same level which we are seeing now. But during that 7 years, the company has accumulated almost 2,000 crores worth of cash now. The balance sheet, in the balance sheet, company is holding 2,000 crore worth of cash. They don't have any debt, and basically they are the largest manufacturer of shrimp feed business in India. Almost 50% market share they have. So if you go to Andhra and the shrimp feed shrimp growing regions, if you ask anybody about Avanti, they will tell that it is the market leader, and most of them buy from them only. 50% market shares in this very highly competitive business is not an easy one. So they hold 50% market share. One main reason why they succeeded in that business is this, because of the company called Thai Union. They have a technical collaboration with Thai Union, Thailand's largest shrimp related business company, one of the globally one of the famous shrimp related business company, this Thai Union. The company also hold 25% stake in this Avanti feed as a non-promoter. They hold it, and why we are and now because of a high balance cash in the balance sheet, now the company is diversifying into pet care business as well as in fish feed business. Also they are one of the largest exporter of processed shrimp. So the processed shrimp is through subsidiary, where Thai Union also hold stake in that, and Avanti Feed also hold the stake in that. So why we are very positive on this company is that this is the investment rationale. See, the main raw material for the shrimp feed business is the 3 raw materials, which is the fish meal, soya dock and wheat are the 3 major raw material for the feed business, and they constitute almost 70-80% of the raw material cost, and these prices were highly fluctuating. In the last 3 years, fish meal prices went up to the roof, because globally if you see, only 2 countries supply fish meal to most of the countries. One is the Chile and other one is the Peru. But in the last 6 months, both these countries has seen huge capture of fish, and fish meal prices has crashed now in the last 2-3 months. The price fell very sharply because of good catches in Chile and Peru, and the company will immensely benefit. Avanti Feed is one of the major beneficiary of these fish meal prices, because that constitute around 40% of the raw material cost. The second one major raw material, soya dock prices, that also sharply down. If you see in the last 2 months, the prices has fell from more than 20% prices has come down, because they have good monsoon in our country. The second thing is that the higher soya oil prices has gone up very sharply. That means soya dock, which is the residue after taking the oil, even if they sell at the lower rate, they won't mind it. So that also one of the reason. And second thing is that the ethanol, a lot of maize are converted into ethanol. So once the ethanol is converted, the residue is there in maize. So many places this soya dock it is getting replaced by this maize residue, because the prices are lower. So because of all this reason, the soya dock prices also has come down very sharply. The only thing, the wheat price has gone up from 30 rupees, now it has gone to 36 rupees per kg, but it constitutes between 10-15% of raw material cost, whereas the fish meal and soya dock prices almost 70% constitute almost 70% of raw material cost. So they are down by 20-30%, means it will directly add to the margin of the feed business, which is highly cash generating business. They don't give fish feed for this shrimp feed for 30 days, 60 days like that. They don't give. Only if you give cash only, they will give. They will supply the shrimp feed. So when raw material prices fall, it will directly add to their margins, and it's a less capital intensive business, and we expect that in the current quarter onwards, the company will start showing very good performance. Generally, this October, November, December is a lean month for shrimp business. In winter time, generally they won't cultivate shrimp, harvest shrimp, and January, February, March, we expect volume growth as well as margin growth. In current quarter, we expect only margin growth, and next year also it will be very good because the shrimp business overall is seeing a cyclical recovery. Last 3-4 years it was very bad, and the overall business also improving. So we expect that the company will post a very good profit, and in the next 6 months we are expecting the stock price will give 50 to 100% return. That's what our expectation in this Avanti feed. And as a disclaimer, we have recommended to our clients as well as I own personally also huge quantity I own, and we own in our PMS also. And market has rebounded. The main reason is that the FII selling has reduced. October and all they sold heavily, now that has reduced and they are alternately buying and selling. That is the main reason why the market has rebounded very sharply. Mainly FII selling is seen only in large cap only. They hold majority of their shares only in large cap. Since the FII stopped selling, Nifty bounced back, but because of Reliance underperformance, it did not bounce back to that extent. Whereas mid cap and small cap, many stocks started moving up again, and the small cap index has bounced back, even came to all time high 2 days back. Yesterday, last 2 days, some profit booking was there in the small cap index. The US market is doing very well, and it's at all time high. Nasdaq crossed 20,000. Dow Jones also went up very well. Now last 2 days it has come down, but US market is doing very well, and because of US market doing very well, we can see the wealth effect in the US citizens. Many of my friends, my relatives are there in US. Everybody is spending lavishly. They are going for trip, cruise trip, other trip, and going for abroad for vacation, spending lot of money for education. The main reason for that is the US market is doing very well. So whenever US market does very well, their economy also do well, because people simply spend lot of money because of the wealth creation they are seeing on the stock market. Unlike in India, most of the US people, they save lot of money only in stock market. So when stock market goes up, naturally their wealth will go up. For example, if you are having 10 crores worth of shares, if market goes up by 30%, means your wealth go up by another 3 crore to 13 crore. So you feel that you are richer by 3 crore, and you will try to spend more money for clothes, vacations, and a trip, like that you will spend. So that wealth effect impact I am seeing personally among my friends and my relatives who are living in US. So that is one positive when stock market goes up. Similarly, on the reverse, if stock market collapses, means generally government also will get panic in US, because immediately the spending and all will start coming down in US. So government naturally will try to hold the stock market as high as possible in US. And the commodity market is extremely volatile. If you see gold prices, silver prices going up and down 3%, 4%, like that it is going up and down. Whereas in India, the retail confidence remain intact. In spite of all the corrections, we don't see any panic among the retail investors. The recent 10% correction, in fact, many of them are willing to put more money on correction, because people don't want to waste the opportunity of buying lower, and many of them are asking during the fall and all, many asked me where to invest. They ready to put money in mutual fund, whether we can put it now or we can put it later, but they want to put the money. The retail confidence is intact in our market, in spite of the correction we have seen. One minor correction of 10% we have seen in the last 2 months. So overall market seems healthy, and we will get a stock specific opportunity. And the Nifty and Sensex around 3% it has gained, mid cap 4.5, and BSE small cap around 4% we have seen in the last 1 month. And this is the FII cash market flow, and if you see that in the month of October and November, almost 1,60,000 crores they have sold it in the month of October and November. This is the cash market flows, not the overall net flows, because if you see that though they sold 1,60,000 crores net in the cash market, they invested a lot of money in IPOs, QIP and all, that won't get reflected in it. In Hyundai IPO and all, FII bought heavily in that. It's one of the biggest IPO, and foreign institutions bought heavily. But cash market selling, we have seen 1,60,000 in the month of October and November, and December till the day before yesterday it is 9,300. Yesterday also they bought it. So overall FII selling seems to be over, and maybe they may not sell like what we have seen in the month of October. At that time, why they sold was the main reason told was that China money was going to China because that market was attractive. But post Trump victory, now people are seeing Chinese market also very cautiously, because they are feeling that the tariff war may come into place once Trump comes in. So basically they wait what Trump is going to do before committing big money in China. And macro data, GDP growth has slowed down very sharply, 5.4% it came Q2 FY25. Though everybody expected that GDP will come down, this figure was not expected. Overall analysts were expecting around 6.5, 6.6 region, whereas what we got was 5.4, almost 1.1% lower than the consensus estimate. It's a known one because this is July, August, September, the Q2 results we saw, it was not good. So at that time itself everybody expected that GDP growth will be lower. 2-3 reasons, mainly they told the government expenditure was lower, then we had a huge monsoon, elongated monsoon period and a good rainfall, and that contributed to lower spending by people, and that has been shown in the lower GDP figure of 5.4. But from here on most probably GDP will bounce back, and we expect that from Q3 onwards the GDP growth will be good, Q4 will be very good. And this is the sectorial growth. I will tell two things in that. GDP consists of three components. One is the agriculture, the second is the industry, and third is the services. These three components contribute the overall GDP growth. Agriculture has done very well, almost a 3.5% growth, whereas industry, if you see that, it has come down very sharply. Last year, the last 4 quarters, if you see, gradually coming down. And one reason why the overall industry has done well is the manufacturing. Manufacturing was the worst performing among this industry segment, and it was just a 2.2% growth, which led to overall fall in the overall industry growth. Services has done reasonably well. So because of very poor manufacturing contribution, the overall GDP growth has come down. And this is the expenditure of the government, center's account, and if you see that the total expenditure has gone up by just 3% only. So the main problem was the total capital expenditure, and this is the capital expenditure of the government. And if you see between April to October, that is 7-month period, last year government has spent almost 5.46 lakh crore, whereas the current year only they spent 4.6. Almost 15% dip was there in the overall capital expenditure. That is the reason why the GDP has come down below estimates, and capital expenditure has fell very sharply when compared to last year. And lower capital expenditure means that lower spending in the road, construction of road and bridges, lower spending in railways, and lower spending in defense. So that is why the railway companies and all did not posted good results in previous quarter. But government has told that they will kick start of expenditure from current quarter onwards, and January, February, March we will see the peak. That's what they have told, and we expect that they will do. The spending will start coming in. Already we are seeing lot of contracts getting awarded to companies. Railway contracts are getting awarded. Similarly, infrastructure projects, shipping projects, and all, a lot of projects are getting awarded to companies, and the government action has started. What is surprising in all these things is the tax revenue. Government mostly told that we are getting very good tax collection, like that they have told it. But if you see April to October period, the tax collection was almost flat, the net tax collection. So gross tax collection was higher by 12%, 13% like that. Overall, because of high refund, the overall tax collection, net tax collection is almost flat. So government did not have surplus money. Only the non-tax revenue, it has gone up by 50%, mainly because of one time huge RBI dividend they gave. Current year RBI has declared a huge dividend. That is why the non-tax revenue has gone up very sharply, and receipt overall by 8% it has gone up, expenditure by 3%, and fiscal deficit has come down because of lower expenditure. So for our economy to pick up, the government capital spending has to kickstart. Most probably they have already started now. That's why we expect from third quarter onwards the economy will pick up, and monsoon also very good, and agriculture also doing well. The rabi crop is doing very well. And RBI action, if you see, they have cut CRR by 50 basis point. Two stages they are doing it, 25 and 25 basis point they are doing it. So immediately it will be positive for the banks, because whenever the CRR is being cut means banks will get extra money to lend to the customers. If you keep ideal, you are not going to get any interest rate, but if you lend the same money to customers, you will get around 7 to 10% you will get income. So any CRR cut is always positive for the banks, whereas any repo rate cut, we cannot tell that it is always positive for banks, because repo rate and all is transmissible. Once RBI cuts repo rate means bank has to cut both the lending rate and deposit rate, mostly it will be neutral, whereas the CRR cut will be always positive for the banks, because they are getting excess cash to lend to the customers, which they will get interest.
Actually, you are telling it, so okay, bank is getting more money, but
Yeah.
now as such, everybody bank has got full amount with them. Nobody is taking loan. That is when
It will come, it will happen once the economy pick up, no sir.
it will be simply under the
See
nobody is taking loan.
See why nobody is taking loan is that RBI intentionally asked banks to reduce lending to consumer loans, high risk loans and all. They have asked to reduce because on the hope that NPI is going up. To stabilize that, RBI put lot of condition for lending to consumer loans and high risk loans. Most probably they may relax it now.
Yeah, because actually it is 9.5% interest rate.
Yeah.
Suppose they reduce it, people take a loan.
Okay. But it will take some time to reduce the loan, because the inflation is little higher. Also the GDP growth rate also they have reduced it. 7.2% was the previous estimate for the full year. Now they are expecting around 6.6% they are expecting. So what we are expecting is that now new governor has come. Sanjay Malhotra is appointed as new RBI governor. So last in monetary policy meeting, Shaktikanta Das, the last previous RBI governor, he started the press conference by started saying lot of basic things. What is the RBI role in India, like that. So at that time itself I felt that unlikely he is going to get extension, because he told that RBI mandate is two things. One is to price stability is the most important mandate for the RBI. Price stability means to keep inflation low. That is what he mentioned. Second thing is that growth should be reasonable in the economy. Then only employment generation will be happen. So like that he started that press conference. So I felt that starting from basic means most probably unlikely he will get extension. Like that I felt the same thing happened, and Sanjay Malhotra appointed as new RBI governor now. So what we expect is that so already he worked in finance ministry as a revenue secretary. So most probably he may be the confidant of the finance minister. That is why he was appointed, since he worked directly under finance minister. Most probably because of his confidence only he was promoted to RBI governor. So what we are expecting is that most probably in February the 25 basis point cut will happen. That is the next monetary policy meet. New RBI governor will cut interest rate by 25 basis point. For the last 7-8 months, if you watch very closely on the comments made by the Shaktikanta Das, was that he was slightly hawkish. He was very focused on inflation, and his statements were hawkish. So most probably because of that he may not have been given an extension. And this is the historical CRR, and what we have come now is the pre-COVID level. So pre-COVID level the CRR was maintained around 4%. The same thing now we have come. Previously it was 4.7. During COVID time it was reduced to 3. Then once things stabilized, it was hiked to 4.5. Now again we have come to the pre-COVID level. Almost for many years it was 4% only, and most probably we feel this will continue for many years in coming time. And inflation outlook is still very bearish only. See, if see RBI inflation outlook in the recent monetary policy meet, previously they were expecting for full year, they were expecting just 2 months back 4.5, now they are expecting 4.8, almost 0.3% higher they are expecting, and for current quarter from 4.8 to 5.7, steep hike was there, they are expecting, because last 2 months inflation was very high, so that has been revised very higher, and for the fourth quarter from 4.2 to 4.5, and next year first quarter 4.3 to 4.6. So still they are expecting very high inflation in coming months, and 4 only they are expecting, which is the RBI comfort level of 4, they are expecting only in the Q2 of FY26 they are expecting. So RBI overall they are very negative on the inflation front, though it may come down from the peak, still it will be above the RBI comfort level. And bank advances growth has come down. So few months back, if you see most of the securities brokerage reports, FII reports, if you see, they might have written that we are very bullish on India because bank advances has gone up to 20%. So we are very bullish because economy is growing well, like that they have put. But if you see that now the bank advances has come down, deposit growth was lower than the advances growth. So that was a big concern for RBI and many banks also, because the deposit growth was lower, whereas the advance growth was higher, means cannot go forever, because deposit is their raw material for the bank. Only if they get deposit only they will lend it. But instead of deposit growing to the advances level, what happened was that the advances level came down very sharply. That too fell very sharply in the April onwards, during the election period, April, May, June. Then again it fell very sharply. Now almost deposits and advance level are around 10%, but we expect that from here on advance level will go to 13%, 14%, like that it may go, but 20% is unlikely in near term. Now what is happening is that many companies equity market is doing well. So most companies, instead of taking loan from the bank, what they are doing is that they are raising money in equity market, because valuation is very high, they could able to raise money in equity market at a very high premium. So equity market raising is much more good for the corporates, because of high valuations they are raising, and that's why the advances level has come down. Previously also most retail people were taking loan from the bank, and there was a issue that some of the money has been diverted to options trading, and that is why RBI mainly brought some restrictions in dispersing the retail loan, and now advances has come down. Now from here on RBI may relax and advances may go up again. Q2 results, I said previously, it was a lackluster Q2 performance, which was reflected in GDP growth, and we expect that the second half will be much better. And this is the result performance Q2 FY24 and FY25. You see that Nifty 50 company just revenue was up by 9%, and this is the profit after tax. The profit after tax is almost flat, just 3% it has gone up. So minimum it should have gone up by 10 to 15%, whereas the profit after tax is gone up by just 3%. Revenue 9%, profit up by 3%. One of the reason why profit did not went up much is that the margin, profit of margin has come down from 11.9 to 11.3, and that is why the PAT is lower than the sales. And Nifty next 50, if you see that 11% growth in revenue, whereas profit gone up by 7. There also margin compression was there, but mainly in Nifty 50 the margin compression was seen more. A primary market is very active, and if you see that 2024 till now 1,41,000 crore has been raised till November 26. We expect more IPOs to come, and LG, one of the famous Korean company, after Hyundai raised record money in IPO, now LG also planning to raise that money, and most probably that also will come, and many more interesting companies will come for IPO. So whenever IPO comes, it throws opportunity to the investor. Maybe now the premium may be high, listing price may be high, but after 5 years or 10 years, it will give options to investors to invest in more companies. Paytm was listed few years back. Now another company, MobiKwik, in the same business of Paytm, the IPO is opened now. So you are getting two options now, whether to invest in Paytm or MobiKwik, and you can choose it which is good to you. So when more companies get listed, it's always good for the investors because you will get more options to buy. Hyundai previously only few handful of passenger car, pure passenger car, you had only Maruti was listed. Now you are having Hyundai on the other hand. So you will get options to buy, whether to buy Maruti or Hyundai. When many mutual funds they come out with an auto theme mutual fund scheme, means they had very less options. What they will do, they will buy banks like HDFC Bank, ICICI Bank in their auto fund, because they may tell that they are financing to buy autos. That is why we have, because the option is less for them to buy. Only few 6-7 automobile companies are listed in India. M&M, Tata Motors, Maruti, and two wheelers, TVS Motor, Hero Motor, Bajaj Auto, like that you can count number of companies listed in India, pure play auto companies. Now Hyundai you got it, suppose some Chinese company may get listed. So more company listing means more options to the investors, and it is always good for an investor for having a very good primary market, because if not now the premium may be higher, the listing price may be higher, but 5 years down the line, 10 years down the line, you will get good options. I still remember that in 1990s, in mid 1990s, 1991, 92, Harshad Mehta boom was there and market was doing very well. So after that, many FMCG companies listed during that period, 93 to 96, if you see, lot of good companies listed. At that time premium was higher, but after 5 or 6 years, it gave many options to investors. For example, Godrej Consumer listed at that time only. Dabur came with IPO at that time, 94-95 period. Marico came with an IPO at that time. Kotak Mahindra Bank came with IPO at that time. The name was different. Godrej Consumer came as an Godrej soaps they initially listed, and then after that they merged with some companies and became Godrej Consumer. And if you see in the last 20 years, 25 years, this company has created huge wealth. Marico, it came with an IPO at that time. And if you say after 20-25 years, this company has created huge wealth. Similarly, Kotak Mahindra Bank. So whenever the primary market is very active, means you will get more options on a long term basis. May not be immediately, because now market is higher, the issue price will be higher, and listing price also will be higher. You may not buy, but after 5 years, 10 years, it will give good opportunity. And market cap to GDP, if you see that everyone says that India is overvalued, but one market which is the mother of all bull markets we are seeing is the US, where the market cap to GDP is almost 216. When it was 150 in 2007-8, Warren Buffett told that this is unsustainable, market is at a peak. Now if you see the market cap to GDP, it's more than 200 in USA. In India, it is slightly above 150. This is India, slightly below 150. Japan is slightly above 150. So the problem with the Japan is that their GDP is not growing much. So what happens that whenever equity market rallies, it will reflect to higher valuation. Market cap to GDP ratio will go up because the GDP is not going up. Whereas in India case and US case, the base also going, the GDP also going up. The other two markets, if you see the Brazil and China, they are trading at a very low market cap to GDP of less than 60. So US, everyone saying that extremely overvalued US markets are, their Bitcoin is doing going up, and no, everyone knows that one day it will fall, but no one knows when it will fall. That is the issue. So this is the Bitcoin chart, and say one Bitcoin now equal to 1 lakh dollars. So if you want to buy, if you transfer 1 lakh rupees, you want to buy one Bitcoin, means a fraction of Bitcoin it will be credited to your account, because one Bitcoin has become to 1 lakh dollar. And when the Bitcoin was around 500, 800 level, at that time many of them told that Bitcoin one day it will touch 1 lakh dollar. So what they have told has happened, but one thing many are missing is that they told based on certain assumptions. They told that 15 years down the line, most of the internet trading, internet transactions will be happening in Bitcoin, but nothing is happening now. no transactions are happening in Bitcoin except very minute, and most of the smuggling and illegal activities mostly happening in Bitcoin. So the price rise we have seen in the Bitcoin is that mainly because of the sharp rally, the last recent leg of rally is that because of Trump, he supports these cryptocurrencies in US, and because of that it went up. But those who told that when it was around $400, $500, they told that one day it will touch 1 lakh. They told based on certain assumptions, but no assumptions has came true till now. But only thing, the price has achieved target, which means that most of the movement recently happening is mainly because of speculative action. Lot of ETFs are there in US who buy this Bitcoin, and they are leveraged ETF. For example, if you put 1 rupee in that ETF, means that ETF will take 1 or 2 rupee leverage from the banks, and they will buy more ETF, more Bitcoin they will buy. So leveraged ETFs are there in US which are buying this Bitcoin. So main thing is that in the last leg is purely a last leg, not most of the rally happened in Bitcoin is based on speculation, and some of the things which those who predicted that it will come to $1 lakh based on certain assumptions, no assumptions has come true till now, that it will replace the dollar, and most of the transaction on the internet will happen in Bitcoin, money exchange will happen in Bitcoin. Nothing has come true except that the price has touched $1 lakh. And India is the 4th largest economy in the world, and if you see in most parameters India will be good, but one factor where India will be lagging is that per capita. If you see any item, the per capita consumption will be lowest in India. Per capita revenue, per capita income and all will be lowest among many countries. If we rank per capita revenue, means India will be far behind on the table. So one reason why in India the per capita we lag is that the female participation is very less in India. So almost 50% of population don't go for a job. If you don't go for a job, means you are not going to earn anything, and naturally it will show in per capita income. When you average, means it will go away. Similarly, we have lot of young age people, 18 years, less than 18 years, they go for schools and they don't contribute to economy. So that also is one of the major reason why our per capita income is less. And if you see the female labor force participation of major economies, India is one of the worst. Only 20% of female participate in the labor, which is even Saudi Arabia is slightly higher. Among other countries, if you see Japan, China, Taiwan, everything is above 50. So once 50% of population don't go for the job, and that 50% only 20% go, means what will happen? Naturally, the per capita income and all will come down. So this is one reason why India lacks among other countries, and now it is gradually going up. So it will take another 1 decade to improve it. From 20 immediately it won't go to 50. It will get 3-4 decades for it to go to 50 range. And solar stocks, if you see daily it is going well. A lot of companies are coming out with IPOs, and many companies has multiplied multiple times. Actually, some of the companies and all Wari and all listed at a very high issue price. From there also it went up, and one of the reason why it is going up very sharply is that there is a expectation that by 2035 solar through solar generation will be the highest mode of generating the electricity. That is what this World Electricity Generation Report says. International Energy Agency data from international they are expecting. So the coal will gradually come down, whereas the solar will go up, natural gas gradually will go up, and wind also, hydropower is stable. Here the wind also will go up very sharply. That's what their expectation is. So both solar and wind will generate a lot. This wind is this dark blue. It will be the second largest. The top will be solar. Through solar huge generation will be there by 2035. Another 12 more years is there that we have to see. So that is why there is a huge interest among many people on buying this solar stocks. A lot of speculative is also happening. So we have to be very careful and we have to buy it. That is what the long term projection is. Mutual fund flows is still very steady, more than 30,000 crores in the last 7 months. That is after all corrections. So lot of NFOs are coming. Whenever NFOs are coming, then generally the mutual fund inflows will be higher, because it is very easy to market NFO rather than an existing scheme. Somebody who is new to the market, we can tell that this company is coming out with at a 10 rupees face value, means people generally put 50,000, 1 lakh very easily. Instead, if you say some existing scheme which are having a NAV of 1000 or 800, means they may hesitate to put. So now 3 more NFOs are coming, most probably more money will come, and this is after during this time we had some fall in the market. So in spite of market corrections, the equity inflows remain steady. The events to watch, foreign institutions we have to see it, most of the selling is over, and next week this US Fed meeting is there on 18th. So it is expected that 25 basis point cut they will do. Market is almost discounted that, and we have to see what they are going to tell. And already 75 basis point they have cut in the last two meetings. So another 25 basis point they are expecting to cut in the current next week meeting. So almost 1% fall in interest rate. So when US starts cutting rates, means naturally the Euro ECB yesterday, European Central Bank also cut rate by 50 basis point. So lot of rate cut already started in Western countries, and we expect that from once rupee gets stabilized, means most probably RBI will cut rate in February meeting. Okay, thank you. That's